The only thing that was down was Bitcoin and energies.
It's even today, we're going to have Microsoft, we're going to have Meta, we're going to have Tesla. After the close, and we're going to have some other.
We know that what he did mention was nuclear, solar, gas are going to be the ways to get the energy to those sources.
This is a brand, it's a new emerging field, so we don't have a perfect answer to that question. I just think that the investment environment for equities and stocks going forward is very positive.
This conversation set the stage for what's going to happen in the next 48 hours. Hey everybody, it's me. Look up in the sky. It's a bird, it's a plane. No, it's the Einstein of Wall Street here from the balcony at the New York Stock Exchange. January coming to a close, 2026, absolutely spectacular, wild roller coaster ride that we've been having here at the New York Stock Exchange and in all the equity markets. A lot of geopolitical, global stuff going on, a lot of interest rate stuff going on, a lot of earnings stuff going on, a lot of Trumpian stuff going on, a lot of government opening and close stuff going on. And actually today, when we are meeting here, today is the first time in history that the S&P 500 actually hit that 7,000, that illustrious, incredible level of 7,000 on the S&P 500, which is amazing, right? One of the things I've been going after everybody to see is where we're going to hit Dow 50,000 first or the S&P 7,000. It's a real number. These are real landmark numbers that signify, incredible levels of growth and bullish sentiment in the stock market. And so there's nobody better to come and talk to it and give it the big breakdown than my man Tim Anderson. Welcome back. He's been on a little bit of a journey, so we're welcoming back to the show. So you know what? Look, we're here. January's been pretty wild. We haven't actually spoken in January. I don't think.
A lot of cross currents, a lot of volatility, more volatility in individual stocks and some subsectors than we have in the market overall, although we've certainly had some sizable up days and down days. But when the Dow is pushing at 50,000, the nominal moves are going to seem big on paper, but as a percentage basis, it's...
All right, so let's close out, while I have you, let's close out the 2025. We know we closed out the year, not at the high highs, but it was a significant year, right? We know the Dow was up 14%, the S&P was up 16%, and the NASDAQ was up 19%. Right. We know that gold and silver were up triple digits. The only thing that was down was Bitcoin and energies and oil, let's say specifically. So I think we closed out the year quite well. Obviously, the question coming into 2026 is going to be what's the trajectory as far as interest rates goes and the new Fed chairperson, whoever that may be, on the dovish side. And we are in the midst of an interest rate cutting cycle. You sort of illuminated me to that. And we do know historically that when you're in that mode, that the year to come should be up double digits. We came into January with just a lot of components, there was a luck and muck and mire. We still don't have, we're still coming out of the trauma that we experienced during that November wild move, right? When the probability of a cut went from 15% up to 85%. We got a sense of where people's portfolios and where their allegiance was. Basically, it seemed very evident that all, the big players had very interest rate sensitive portfolios because of the way the market reacted. But we are still trading in the dark around. We know that when the government shut down and then the government reopened, we basically are still trading in the dark around the economic data. September, October, November, we still don't know a lot. December, January. Now we're about to enter maybe into another government shutdown. So, we know that all that economic data is pivotal for the Fed to make their decisions, right? Since you were here, we are still anxiously waiting for a Fed meeting, which is going to happen today. We are anxiously awaiting to see if there's going to be a cut or a raise, and or more importantly, what is going to be the nature and the posturing of the Fed chairman going forward, right? We know that he's on his way out. Somebody new's coming in, but he's still in place right now. And so he's got to be reading the tea leaves, right, to be able to make a decision that's going to be helpful. Give me a sense of January for you, and what do you think's going on?
So let's talk about, whether or not we get a government shutdown, whether it lasts. If we get one that lasts 3 or 4 days, we know that doesn't mean anything.
Gotcha.
The last time even when it lasted 25 days or so, it ended up not meaning a lot either.
Correct.
But let's talk about where we're going to have some clarity in the next few days.
Okay.
We're in a very heavy earnings reporting season. It's even today. We're going to have Microsoft. We're going to have Meta, a.k.a. Facebook. We're going to have Tesla after the close. And we're going to have some other very meaningful companies report also after the close, Las Vegas Sands. It's a very heavy earnings reporting week. It's also a Fed decision day. Now they're probably we are most likely in a environment where the base federal interest rates, the Fed funds rate, is on a trajectory of going lower, but it seems like it's very unlikely that they are going to cut today.
Correct.
They've cut for the last 3 meetings.
Correct.
They're probably going to take a pass today, and all of the juice in the market will be on what they say.
Correct.
We're not going to get a dot plot today,
no.
which I don't think really means anything. That I used to hear years and years and years ago that Powell didn't like the dot plot anyways. But then we're going to get earnings. And earnings are going to be big because if you want to call them the Mag 7, you can call them that. The big, high-powered,
tech
mega
names,
cap, AI-driven companies that were the rage for
2025 and the years before that.
You know, at least the last 18, 24 months. Have stalled and are on a kind of a side where they're consolidating the big gains they've had.
Their
from
last
the last
earnings
2
were
years.
spectacular, right? We know Palantir and Nvidia's earnings were blowout last.
And Palantir looks a little worries me a little bit on the chart. It could hold this level and go back up toward highs, but we're not going to talk about Palantir today.
Let's talk about the bank. Let's talk about the look historically. No, let's say over the last year, we know that usually out of the gate it's the banks that come out first on earnings, and they have been beating. 80% of them have been beating for the last number of quarters. This time it was a little. Time was a little weaker than normal. The bank earnings were a little bit squeaky this semester, as it were. Correct?
I think that their raw numbers were very good. But we also, right in that 4 or 5 day stretch, had these comments coming out quite aggressively from the president that he wants a 1-year cap of 10% on credit card interest rates. So that happened right around one of the days when that would be very, very significant.
Because right now we're paying 25%.
And as we know with Trump, that's an initial
it's a negotiating
entree,
tool. Correct.
And we'll see what version of that comes into play, either by just the banks playing nice,
pushback, or playing nice.
Some official. I don't know if it would take legislation or what it would take.
Right.
But so the banks got hit right around there. But look, we're in a rate cutting cycle, although the pace won't be probably what it was in the fourth quarter of last year. But the financials seem to be in have a lot of positive things for them going on right now. They had a very good move last year. They probably have a little bit of work to do, as do some of the big high-powered tech names. There's a lot of talk about how the AI trade is going to shift down maybe to the first or second derivative. And we'll see if the end users that are buying all of these latest and greatest chips and putting them into their manufacturing processes, their other processes, depending on what kind of a company they are, whether you get increased productivity from them. That productivity number we've heard a lot more about than we have for years, because it most likely comes from integration of AI. So
fascinating.
You know, that's how you get a GDP report of 4.4% when everybody says the economy's not that great. 4.4% is almost not quite off the charts, but it's going in that direction.
So look, we do know that from obviously the words that came out of Jensen's mouth at the end of December of last year was that the only thing that would be any kind of an impediment, an obstacle, or a catalyst to the trajectory of the data center building out and starting production is going to be energy, And we knew that that's because look, they're not going to let that the data centers, wherever they're going to be built, are going to be impacting the grid that already exists. So we're going to have to bring in a secondary energy piece, and there's a lot going on.
And there are some
that.
stocks that have been very strong beneficiaries of that theme.
Tell me about that, because we know that what he did mention was nuclear, solar, gas are going to be the ways to get the energy to those sources. What stocks?
Well, I have to be very careful about how I mention individual names, but there's
disclaimer, no recommendations
here. There's Okla, is a name that gets tossed about. There's this
stock.
new technology that didn't exist in the nuclear energy world decades ago when we were building nuclear plants, called small modular reactors. Okay. Wow. SMRs.
Right.
Okay. And those are small nuclear-driven plants with today's technology incorporated into that allegedly companies can put up and to power.
Do they have enough energy to
power
a data center?
To power a mega data center? But it's so that's not. This is a brand. It's a new emerging field.
All right.
So we don't have a perfect answer to that question. But theoretically, yes. Or they can power significant amounts, depending how big the data centers are.
Correct. Well, it's 800 GBs.
You know, and the other, there's a company, the symbol SMR.
Okay.
The name of it escapes me. New Scale Energy, I believe it is. Okay. A little bit more speculative.
Okay.
But it has had, it's come off its really, really highs. I think it traded as high as in the mid 40s.
Okay.
It's probably in the low 20s right now.
Right.
There's some potential there, but
there are nuclear names. There are a number of names in the energy
as to what
sector.
The permitting process is going to be, whether it's going to be as strict as it was for full-blown nuclear power plants that we were building in the 70s, or for whether or not some of that can be skirted because it's not a nuclear plant like what we were building in the 70s. So a lot of uncertainty.
We don't know yet which is the sector that's going to. We know it's going to be energy bound.
Yep.
We don't know really which sector, whether it is going to be solar. I mean, I'd interviewed a guy. We were talking about building data centers in space because of solar. That is actually a possibility.
That is
a thing. Amazingly enough, that is a thing. Then there's nuclear. There's gas. We did an interview, Matteo and I, the other day with this guy named Thomas Healy. Thomas Healy was the youngest CEO of a publicly traded company. He went public here with Hyliion. He's the inventor at the age of 23 of the only electric 18-wheel truck. Okay. He was the guy who did the commercial with me, the Connecting People to Opportunity commercial that the NYSE did, as one of the youngest CEOs in history and the youngest CEO of a listed company. His stock came out at 10. It went to 60 when the whole electric car thing was booming. And then obviously we know that whole sector went to the bowels of all, and the stock went to 50 cents. This young man, who is now 27 years old, saw the writing on the wall and decided to pivot. He ended up buying a company from General Electric that basically makes generators. It's a 3D built generator that basically has the energy capabilities of powering a data center. Right, so it's amazing. Stocks trading. This is once again not another recommendation, but it's amazing. We're going to start to see things pop up, right? Small new companies with new ideas.
And one of GE's spin-offs, GEV. That's part of the story
that's kind of where it's coming from. A lot of these
threefold increase
so
in
this
that
is going to be some
since
kind of a power generator.
From GE.
All right,
GE has made generators for
correct.
For
and so
for a
he
long
bought
time.
the company, and now he's having a revival, and so that's a wonderful story. We interviewed him, and we're going to look more into that. But let's talk about what else happened here in January. For first couple of weeks, we did come out of the gate with some earnings that were a little softer than expected. The market could not figure its footing on directionality, right? And then, of course, we had Davos. Now we know, you and I know, we've talked about it before, that going back to Trump 1.0 and Davos 1.0, the time he mentioned tariffs in China. The stock market went down on a Tuesday at 11, 1,400 points. By day's end, it was up 1,400 points. We had an intraday reversal going from bear market to bull market in one day, something that used to take generations. Once again, Mr. Trump goes across the pond. He decides that after the Venezuela thing, he's been on his road towards a touch. No disrespect to you, sir, on the road to megalomania when he decides he wants to go after Greenland. Right? For whatever his motivation is, his claim was that it's a matter of national security for the U.S. That if we don't take over Greenland, then the Russians will. And so that's his agenda. I get it. But he did go up against the Europeans, obviously, being on their land, right, and in their ecosystem, where it's not willing to go for that story because they can't really figure him out yet. And so they decide to push back on that story. And then once again, he used his incredible The Art of the Deal, and he goes, okay, you don't want to play with me this way. I'm going to put some more tariffs on you guys, 10%, 25%, whatever it is. The market did not respond well to that. Once again, tariffs is surely anxiety unknown. right, and tariffs are 2 words, 3 words that the market can't handle. They don't like it, and they react aggressively to it. And so we sold off 1,000 points that day.
Right.
Now, we should have known historically that
course.
Mr. Trump throws out a swath, and then he pulls it back. And sure enough, within 24 hours, he had found a framework for a deal that he could make without having to make actual physical inroads into Greenland. We still don't know what that really looks like yet, but we were able to tamp down that aggressive narrative, and the market leveled itself off. Now we are up against, look, the market is not making it easy for us to get to S&P 7,000 and or Dow 50,000.
Right.
It's making us work for it, right?
Yeah.
And that's fine. It's legit.
Yeah.
It has every right to do that.
Sure.
And I think we are, we also know that how January goes, so does the year. If you're a fan of seasonality, that's an old Wall Street thing that says if January closes out on the upside, then historically it's going to be a positive year. I don't go for seasonality any longer. We've seen that in the last couple of years. It doesn't really pan out. However, we've been trying to find our footing for January. We are in the end last few days of January here, and we are pushing up. As I said, we did hit 7,000 in the S&P today. These are real numbers. This is real money being put to work. Even though there's been a bit yesterday, we were up 40 handles on the S&P. We were down 400 on the Dow. Right?
That's because of UNH. United Healthcare was
okay.
down 60.
I was going to
was
ask
down
what
60
it was.
points yesterday,
Okay.
20%.
Because?
Because they gave very cautious guidance going forward, and they're up against major structural changes in the what they call the CMS world, where they're in the crosshairs of the administration that wants lower costs for consumers. They want to give money to individuals rather than to the insurance companies, who were the major beneficiary of Obamacare going back 15 years ago. And they have just raked it in.
Correct.
Okay, so
stock went from 30 to 500. We know that somebody's making money.
Right, United Healthcare, a Dow Jones member. It's
one
an
of the heaviest weighted ones.
arithmetic index.
Yes.
So when it goes down 60 points times
it takes the Dow
that's
with
about
it.
450 points on the Dow.
That's exactly what it was down.
So the S&P was up, NASDAQ was up.
Correct. And once again, we are up, although we are fading a little bit here. We are hitting up against some technical resistance at these big levels. Big numbers, 50,000, 7,000 are round numbers.
A lot of people would say it's just a number. It's
not just a number. It's far from just a number.
It's a major psychological barrier.
Huge. And it can be, look, so there are 2 scenarios that are going to happen here. Are we now building a base for a breakthrough? What are we looking at for the next catalyst to go forward? I'm going to let you answer the question. And or are we butting up against resistance and we're not going to get there yet?
One of the things that a lot of the market strategists and chief investment officers really have been talking about during the whole AI mega tech driven rally where a 7 or maybe 20 stocks were powering most of the gains.
Right.
We really want to see the rally broaden out. Rally broaden out. The Russell 2000 has been a wild outperformer.
Fantastic.
So far in January, and anyone would have to say that is very constructive and a very positive sign going forward.
Yes. And you illuminated it. Sorry to interrupt you, but you helped me understand that, because when I look, you were the one who said to me, look at the advances versus declines.
Yeah.
We've had days up 400, down 400, yet the advance versus declines has been 50-50 almost every day.
Yeah.
And what that does is, if you look into the nuance and the nooks and crannies, shows rotationality here, if that's a word, right? People are getting out of their higher performers, getting into small cap, mid cap, and that has been the outperformer for the month.
Right.
Go ahead,
and that's a sign that investors feel that there's going to be significant growth in small cap and mid cap names. And I would also say that if there was, people talk about the economy, it's not really as good as what the headline numbers show.
Right.
To me, that's just ridiculous, because the small cap names specifically, and also the second tier of the mid cap names would not be acting this strong, would not be making new highs week after week after week, if we were at risk of an economic slowdown. Because in an economic slowdown, or even more so in a recession, which we're nowhere near, that the small cap stocks
are the ones that
get
suffer.
hit the hardest.
Right.
Okay, and now they're making new highs week after week after week, and these GDP numbers, I think, are going to continue to
and
come
also,
out
and
with
you're
a four
confident
handle
that, and you're
or
confident
more.
that what you're seeing is that the economic data that we are getting, even though we
Yes.
are not getting it all, is really pointing at an economy that's doing better than we expect. You're seeing strength. You're not seeing weakness.
Yes,
You're not seeing
absolutely,
soft.
yeah. No.
You're not seeing gold and
No.
silver. Any opinion?
Oh, absolutely.
Tell me
I
about
think
it.
that look, and from one perspective,
Flight to safety.
gold traded close to 2000 in 2011.
Right.
It 15 years later, it got through 2000 a year and a half ago.
Right.
Central banks have been buying it like crazy.
Right.
The dollar, without getting into currencies, the dollar has been getting gradually weaker.
Right.
Very
Today,
gradually,
hitting
in
a major
very,
low today.
in a very managed way.
Okay.
That's very good for U.S. exports.
Okay. Yes.
The administration, whether it's this administration or any administration, for the last 30 years, is never going to say the dollar's too strong, we want to weaken the dollar.
Right.
But they have been doing some things quietly to have the dollar gradually depreciate against a few other major currencies.
Right.
And if you want more exports to improve your trade imbalance,
Right. You
that's
need
a
we need a
very,
weaker
very,
dollar.
very positive sign. So if the dollar gets cheaper, it's cheaper to own gold in dollars. Central banks have been buying it like crazy.
Okay.
If is it a little extended?
Above 5,000.
It might be, but it's up $200 today.
Yeah,
so look,
spectacular.
this could go. The longer it takes a stock to break out
Right.
from a level, the further upside it has.
Yep.
Gold had that $2,000
1,800 to 2,000
resistance
forever and
for
ever and ever.
20 years.
Yeah. Incredible.
And now we're through it,
Yeah.
and there's no resistance.
None whatsoever.
Silver got a little bit parabolic.
Okay.
It's probably at about it's between
100
110
change?
and 115 right
and
now.
your reason behind it?
Is that look, the silver to gold ratio used to be like 20.
Okay.
At a year and a half ago, when silver was around in the 20s,
Right.
and gold was breaking out and making new highs,
Right.
and silver wasn't moving yet, it was up to 80, 90,
Right,
95.
right.
Silver has a lot more industrial uses
Okay.
than gold does.
Interesting. And more now than before?
Notice the solar stocks have been very, very hot.
Okay.
And
And
so far this
there's
year.
a use of silver in there?
Definitely.
Okay, I
There's
didn't know that.
definitely
All right.
industrial use of silver
Okay.
in solar.
Right.
And in anything.
Other
with
rare
this
earth minerals?
New age industrial, maybe in your small nuclear reactors.
Right, okay.
And it has a lot more industrial uses than gold. does.
Gotcha.
Okay,
Well, and look,
so-
and it's off to the races once you get that
and
kind
it
of a
had
breakout.
and it had been behind for
True.
decades.
And also, look, you know what? You've got a new, incredibly young audience.
Yeah.
Young audiences like new, shiny things.
Yep.
Right? And they're going after gold. They're going after silver. They're going
Yep.
after everything that's not
Yep.
tied down.
Yep.
And
I wouldn't be surprised at any point in time to see either one of them pull back.
It's
you know,
absolutely
10, 20%.
right. I would imagine that it has.
They
it's
could
got
pull back and still be in an uptrend.
in an upward trend, 100%. It's not something that I would be trying to short at any point. No disclaimer across the board.
Right.
Okay, so we're in the last couple of days of January, right? Are we up for the month? Net
It
S&P?
I think it depends on what index you look
Okay,
at. I would
S&P
bet
up for the month? I think so.
I think the S&P is up a
Up 3,
little bit for the
4%
month,
maybe,
but
yeah.
not a lot.
Okay.
The Russell, I think, is up significantly.
Yeah, for sure.
The Dow
net
might
at
be
49.4,
might
yeah,
be
we could be.
down a little bit. I think we
Maybe a
closed.
touch.
I think we closed at what 49.2, 49.4.
Yeah,
At the end of last
49
year.
We closed at 49,000 straight even yesterday, but we were
No, but I'm talking at the end of the year.
end of the year 49.4.
Yeah,
right. We've gotten as high as
So
49.
we're down what
6.
1%.
Yeah. Mine.
It's not a lot.
Yeah.
You know, and again, United Healthcare, which was a $350
Right, it's been waiting
stock,
on those for
to
the
go down
last couple
60
of- yeah,
points
that's
times
significant.
8, that's 450 points.
Right.
United Healthcare used to be a $600 stock.
Yes, it
so
was. And it was a $30.
And it was a $30
Yeah,
stock
forever
15
and
years
ever.
ago.
Yep.
So look, I just think that the environment, the investment environment for equities and stocks
Right.
going forward
seems robust.
Is very positive.
Yeah.
Now, you'll hear people say, look, we were up 15% 3 years in a row.
Right.
We just can't keep doing this year after year after
Right.
year. And I appreciate the historical perspective,
Yeah.
but the really, really, really smart managers,
Right.
they know that.
Right.
But what they're focused on?
Return.
What are
on
we going to
investment.
do? What's the environment for this year and next year?
Right.
And it's not negative.
Yeah, it doesn't seem negative
Now,
to me
a
either.
little bit of stock selection is probably important.
Okay.
That's why you see some of this rotation into value.
Yep.
And the stock, a little
like
bit of
that.
dogs of the Dow.
Right.
Theory just kind of readjusted a little bit.
Yep.
Beginning of the year.
Profit taking as well,
Right.
too.
So
you've
you
had
got
some of these.
You
And I
got
think
some
you're seeing a
profit
lot of
taking from some
right.
people that didn't want to take book profits in
You see some
25.
trading too.
Yeah.
I think what
absolutely.
I've seen over the last couple of years is too that a lot of the guys who were usually the buy and hold guys,
Yeah.
in order to be able to really to be able to maintain a positive tack
They're
on
going to
these
trade.
years,
They're going to
be
trade a little
trading
bit more
than they
because
have
they
historically.
want to. They want to get some alpha any way they can.
100%.
So they want to if they can get an extra 0.5% here,
Yeah.
an extra
I agree with you.
0.5% there,
100%.
And if the market is not really going all gangbusters up,
Correct. That's what they're gonna do.
They're going to move stuff around.
They're going to slice and dice.
And the
Absolutely.
big hedge fund guys, look, we talked about this a couple months ago.
Yeah.
A lot of them shut down in mid to late November because they had a great year.
Yes,
and they didn't
indeed.
want to deal with any
Some of the best-
extraneous events that might happen the last 6 weeks. So now they're back.
Yep, they
So in
are.
January they're back, and they want to
back.
they want to be involved.
They do not want to make the mistakes that they made last year, which is not be there to buy the dips.
Right.
And not to find themselves underinvested in the market because this market could continue to go higher. So if we have any kind of PTSD from last February, March, and April, February 19th was the beginning of that 20.8% sell-off that we had, and then the Independence Day and whatever, all those other amazing things that happened still around tariffs. Right, and so we do know that Mr. Trump is sort of floating around 100% tariff on Canada. There is some combative stuff around that. He is wielding his heavy wand, and that's look, he's the boss, and so that's the nature of the business. But do you see any other impediments into market continuing?
We're going to have midterm elections in November.
Okay.
Okay, so the midterm year it can be choppy.
Okay. Oh, okay.
On occasion, you can have, you can have some, 3 to 5% corrections along the way.
In midterm years.
Yes, in midterm years,
right.
you can have some chop.
Gotcha.
Okay.
Gotcha. I appreciate the chop.
There's this whole thing now going on with Iran.
Right.
He's saber rattling with them a little bit.
Yep.
Sending big armada of boats and military type equipment over to that part of the world. Maybe that's just to get them in line. Maybe that's to inspire the protests that are
up a
going
little
on
bit
there.
of a geo-global
But there's no
thing.
reason not to stoke those protesters to a more aggressive action if that helps topple probably one of the worst regimes in the world over the last 50 years.
Absolutely, in history. So you know what? So beautiful. You've given us a really spectacular explanation of how we ended the year. How it's only been a month.
Yes.
But just think about the mouthful we just laid into this audience, and this has been 30 days worth of information. So what goes into a day here, what goes into a week, what goes into a month is amazing, right? The amount of economic data that we need the geo-global.
Get a lot of data in the next 48 hours. We're going to get a lot of data. We're going to get a Fed interest rate decision, and we're going to have earnings from major companies in the tech space.
So the next 48 hours is going to be pivotal in a huge way. It's either going to be up, it's either going to be down, but it's guaranteed to be volatile. That's the bottom line, and that's what
impactful. It's going to be impactful.
Absolutely, and so I'm excited about that. I'm excited about the future. I'm excited about the next 3 months, and I think as this unfolds, we're on the cusp of a lot of amazing things. The last thing I'll say is this: there are these sort of underground marinatings of all the doomsayers are out there. Talking about that there is there's a massive why is Warren Buffett at $238 billion in cash, and why is Peter Thiel selling all his positions in the mega mag names, and why is this guy selling that, and why did Zuckerberg sell? Why is everybody, all the big players, all in cash right now? And they don't know, or what, or they are.
Buffett's the ultimate value investor.
Okay.
He wants to buy when
low,
people are
selling.
He wants to buy when people are panicking.
Right.
And he wants to sell when there's massive euphoria.
Right.
So, look, they I think made a miscalculation.
Right.
It can happen to anyone.
Right.
Okay. They're under invested.
Right.
Now they've been selling positions that they've had for decades where
Right.
they've made
there's plenty of money in it.
incredible money.
Right,
So there's
100%.
nothing wrong with that. They got
Right.
new leadership there.
Right.
They probably want to put their own stamp on things.
Right.
And somewhere along the line, I'm sure that they're constantly looking at where the opportunities might be. Peter Thiel is really a angel investor,
Right.
early stage venture capital investor.
Right.
Early stage private equity investor.
Right.
So he's selling things that he bought
Right.
15 years ago.
100%.
That
So
he's
there's
up
nothing wrong with being in
1,000,
cash.
2,000,
Percent.
5,000%.
100%.
I don't know that he's selling every single thing,
Right.
but he's looking for the next.
Correct. Right.
He's
So
looking
I
to
said they
invest
are
in the
visionary.
next NVIDIA.
Right.
Look,
So how people interpret
the guy
things.
that runs SoftBank is doing the same thing.
Yeah.
People got all hot and bothered when he
Right,
sold a
right.
big chunk of his NVIDIA.
Yeah.
But he's buying. He's investing in OpenAI.
So look, it's
he's
two
probably
ways of
also
looking at it.
investing in things that are much smaller than
Or
OpenAI.
the secondary, or the energy names that
Yes.
are going to be coming out.
Exactly.
I
So-
love that interpretation because
You have to
people
think
will
about
love.
what Peter Thiel is. What business is he really in right now? He's involved in like seeding the next wave
the
of
next wave.
growth
Right.
companies that we don't even understand what business they're in yet.
100%. So while some people will look at that as, oh my God, they know something that we don't know, you're saying that there's not, look, we don't know where they bought them. We know where they're selling them. There's plenty of profit in there. Why wouldn't you want to be in some level of cash? Look,
Right.
for them to sell $250 billion worth of stock is a partial part of their portfolio.
Right. Yeah.
Does not mean that they are still not net long a huge amount of stock
Right.
and other things. And why wouldn't they? Why wouldn't you do that? Look, there's plenty of uncertainty. As we know,
He's not
we're
a
always-
portfolio manager.
we're-
He's not an
exactly,
institutional
exactly.
investor.
And
He seeds
correct.
future growth companies.
What about Japan, though? Didn't we
Well, so,
recently?
okay,
Is
so
there
that's a
another-
great question.
Is there another
Because there's a
carry
lot of-
trade about
Because
to
there's a
happen
lot
here?
of headlines about how, oh my God, Japan is their cost of their interest rates are going having
Up
this
and that's
crazy
gonna
move.
create another carry trade.
Okay, I would just say time out.
Yeah.
Okay, Japan had zero interest rates for
Forever.
30 to 40 years.
Right.
It killed their economy.
Right.
It's done major structural damage to their whole society.
Right.
Nobody, if you're a global investor, a global developer, why would you ever put up a multi-billion-dollar project in a part of the world where there's zero growth?
Right.
You don't want zero growth.
No.
You want 3 to 5% growth or more.
Right.
Okay? So for them, for their interest rates finally to come off zero
Right.
and be at 1, 1.5%, 2%
Right.
is very, very, very positive. Now, on a percentage basis, to go from a quarter of a point interest, a quarter,
Right.
0.25 percentage
Right.
interest rate to 2, that's a eightfold increase.
Yep.
So people are going to say that the rate of anytime you have a very, very high rate of increase in interest rates in a short period of time,
Right.
it is going to have some disruption.
Right.
But for Japan's economy for the next few decades,
Right.
to me, it's wildly positive.
Beautiful. Okay. You know what? You have laid it out. I think we've got, look, well, you know what? This conversation set the stage for what's going to happen in the next 48 hours. What's going to happen in the next 48 hours is pivotal in every respect, from earnings, from the Fed and their trajectory going forward with interest rates, because that's the most important stuff going on right now. That is the breakout news. So you know what? We're going to pick this up with breaking news probably in another 2 or 3 days. I'm going to revisit my man Tim. Tim, you're the best. You know what? And that's all I got to say about